Welcome everyone. I'm Emad Sroor, and today we're diving headfirst into the exhilarating world of high-stakes trading, a realm where fortunes are made, legends are born, and every decision can tip the scales between success and failure. We're not just talking about any traders, we're talking about the titans: Warren Buffett, the Oracle of Omaha; George Soros, the man who famously broke the Bank of England; Paul Tudor Jones, a macro trading maestro; Ray Dalio, hedge fund innovator; and Stanley Druckenmiller, the steady hand behind so many market triumphs. These names echo through the halls of Wall Street like thunder. But here's the twist. While the world watches these giants shape the markets, there's another player at the table, a clever, almost invisible trader, quietly studying every move these titans make, capturing their wisdom and applying their strategies for personal profit. This shadowy follower doesn't seek the spotlight, but their bank account tells a story of silent victories. Today, we'll peel back the curtain on both the masters and the mysterious follower. We'll look at the powerful strategies, the bold moves, the pitfalls, and the sheer genius that define the trading elite. And perhaps, just perhaps, we'll uncover how ordinary people, just like you and me, can ride the coattails of greatness and carve out our own legacy in the markets. Let's begin with a living legend, Warren Buffett. If you don't know Buffett, you don't know the market, plain and simple. He's the chairman and CEO of Berkshire Hathaway, and his name is synonymous with value investing. The man reads balance sheets the way most of us read novels, and he finds gems where others see dust. Buffett's strategy is deceptively simple. Buy wonderful companies at fair prices, hold them for the long term, and let compounding do its magic. But don't be fooled. There's genius in that simplicity. Buffett's approach was shaped by his mentor, Benjamin Graham, the father of value investing. He's a stickler for fundamentals, earnings, assets, and management quality. He's not chasing the latest tech craze or meme stock. Instead, he's looking for businesses with a durable competitive advantage. Think Coca-Cola, American Express, and Apple. His patience is legendary. Remember, he once said, "Our favorite holding period is forever." But what really sets Buffett apart is his temperament. He's calm when others panic, and greedy when others are fearful. That's not just a catchphrase, it's a way of life. During crises, Buffett is the one buying when everyone else is running for the exits. He's made some of his best deals when the world seemed to be falling apart. Take his investments during the 2008 financial crisis, for example. He injected billions into companies like Goldman Sachs on terms that made sure he came out ahead. Buffett's annual letters to shareholders are required reading for anyone serious about investing. They're packed with wisdom, wit, and humility. He's quick to admit his mistakes, and he's always learning. He doesn't pretend to predict the market's every move. Instead, he focuses on what he can control, finding value and sticking to his principles. And let's not forget his frugality. Despite being one of the world's richest people, Buffett still lives in the same Omaha house he bought in 1958. He drives himself to work and prefers a good burger and cherry Coke to fancy cuisine. It's a reminder that success isn't about flashy lifestyles. It's about discipline and consistency. Buffett's impact goes far beyond his own portfolio. Generations of investors try to emulate his methods. His annual shareholder meetings in Omaha are like financial Woodstock, a pilgrimage for investors from all over the globe. People hang on his every word, hoping to catch a glimpse of his next big move. But here's the kicker. While everyone's watching Buffett for the next big tip, our clever follower is watching Buffett's habits. They study his buys and sells, read his letters, and try to decipher his mindset. They may not have billions to invest, but they mimic his approach, scaling it down to their own portfolios. And guess what? Consistent, steady gains follow. Buffett proves that you don't need to be a genius or a gambler to win on Wall Street. You just need patience, discipline, and a willingness to learn from the best. That's the first secret our follower picks up on, and it's a lesson anyone can use no matter your starting point. Now, let's shift gears from value to volatility. Enter George Soros. If Buffett is the steady hand, Soros is the daring tactician, the man unafraid to take risks when the odds are in his favor. Soros is best known for his legendary bet against the British pound in 1992, a trade that earned him over $1 billion in a single day and shook the foundations of global finance. Soros's strategy is rooted in macroeconomics. He's always looking at the big picture, the interplay between currencies, interest rates, and geopolitical events. While most traders are focused on stocks, Soros is thinking about entire nations. His philosophy? Markets are inherently unstable, and the crowd is often wrong. He coined the term reflexivity to explain how investors' perceptions can actually shape market realities. That's a bold idea, and Soros has the track record to back it up. He founded the Quantum Fund in 1973, and over the next 2 decades, he delivered returns that most investors can only dream about. But it wasn't just luck. Soros combines deep research with a willingness to act decisively. When he saw that the British government couldn't keep the pound propped up, he bet big, and he won big. Soros's career is filled with high-stakes moves. He's taken on central banks, bet against entire economies, and navigated political upheavals. But he's also a master of risk management. Soros is quick to admit when he's wrong, and he's famous for cutting losses fast. It's not about being right all the time, it's about betting big when the odds are stacked in your favor and minimizing the damage when they're not. The Soros move is legendary. Identify a major market mispricing, size up the bet accordingly, and act with conviction. That kind of courage isn't common, and it's not for the faint of heart. But it's precisely this audacity that has made Soros a household name in the trading world. But for our clever follower, Soros is more than just a risk taker. He's a teacher. The follower studies his big trades, tries to understand the logic behind them, and, perhaps most importantly, learns how to manage risk. They're not trying to move markets like Soros, but they do look for situations where the crowd has it wrong and the odds tilt in their favor. Soros also teaches us the value of independent thinking. He's never been afraid to challenge conventional wisdom, and that's a trait our follower adopts wholeheartedly. In a world where everyone's copying each other, the real edge comes from seeing what others don't. Lastly, Soros's philanthropic endeavors remind us that trading isn't just about making money, it's about making a difference. He's given away billions to causes around the world, proving that you can be both a shrewd trader and a force for good. For the follower, the lesson is clear: big rewards require big risks, but only when you truly understand the game you're playing. That's the Soros secret, and now it's part of the follower's playbook. Our next titan is Paul Tudor Jones, a name that resonates with anyone who's ever dreamed of calling the next big market move. Jones is the founder of Tudor Investment Corporation, and he's made his mark as a master of macro trading. But what really sets him apart is his uncanny ability to anticipate major market turns, often before anyone else sees them coming. Jones first came to fame in 1987, when he predicted the stock market crash and made a fortune shorting equities. While others were blindsided, Jones had already done his homework. He combined technical analysis with a deep understanding of market psychology, a rare skill set that allowed him to spot bubbles before they burst. But Jones isn't just a one-hit wonder. His career is a testament to the power of adaptability. He's traded everything from commodities to currencies, always looking for the next big opportunity. He's not married to any one asset class or strategy. If the facts change, Jones changes his approach. That flexibility has kept him at the top of the game for decades. Risk management is at the core of the Jones philosophy. He's famous for saying, "The most important rule of trading is to play great defense, not great offense." It's a motto our clever follower takes to heart. Jones never bets the farm on a single trade. He sizes his positions carefully and always has a plan for when things go wrong. Jones is also a relentless learner. He spends hours studying markets, looking for patterns and anomalies. He's not content to rest on past successes. Every day is a new challenge, and every trade is a learning opportunity. That mindset is infectious, and it's something our follower strives to emulate. One of Jones's most famous strategies is trend following, riding the wave of momentum rather than fighting it. He looks for confirmation in price action before committing capital. It's a disciplined, methodical approach that keeps emotions in check and maximizes the odds of success. But Jones isn't all about numbers and charts. He's deeply philosophical about markets and life. He believes in the power of intuition, honed through years of experience. Sometimes, the best trades aren't the ones that look perfect on paper. They're the ones that feel right, deep down. Jones's philanthropy is another signature. He's the founder of the Robin Hood Foundation, which fights poverty in New York City. Like Soros, he proves that great traders can also be great citizens. For our clever follower, Jones is an inspiration. The follower studies his trades, his interviews, and even his philanthropic work, looking for clues to his mindset. They may not have the same resources, but they can adopt Jones's adaptability, risk discipline, and relentless curiosity. By channeling the spirit of Paul Tudor Jones, the follower taps into a powerful trading philosophy, one that balances boldness with caution and intuition with analysis. That's another secret for lasting success. Now it's time to talk about Ray Dalio, a true pioneer in the hedge fund world. Dalio is the founder of Bridgewater Associates, the largest hedge fund on the planet. His approach to investing is both revolutionary and systematic. He's a thinker, a builder, and a relentless innovator. Dalio's signature is his principles, a set of rules and guidelines that govern not just his investing, but every aspect of his company and life. He believes in radical transparency and open debate. At Bridgewater, employees are encouraged to challenge each other and question assumptions. It's a culture that fosters creativity and resilience. When it comes to investing, Dalio is all about diversification and risk parity. He doesn't put all his eggs in one basket. Instead, he builds portfolios that can weather any storm, what he calls all-weather investing. It's about finding non-correlated assets and balancing them in a way that minimizes risk while maximizing returns. Dalio is also a master of economic cycles. He's spent decades studying how economies rise and fall, and he's developed models that help him anticipate turning points. His book, Principles for Navigating Big Debt Crises, is a must-read for anyone serious about understanding the macro landscape. But Dalio's biggest contribution might be his emphasis on learning from mistakes. He keeps detailed records of every trade, analyzing what went right and what went wrong. This culture of continuous improvement is something our clever follower adopts eagerly. Every loss is a lesson, every win an opportunity for refinement. Dalio's philosophy extends to life outside the markets. He's a big believer in meditation, self-reflection, and lifelong learning. He's always looking for ways to grow, not just as an investor, but as a person. For the follower, this holistic approach is a revelation. It's not just about making money, it's about becoming better every day. Bridgewater's flagship Pure Alpha Fund has delivered stellar returns for decades, thanks to Dalio's disciplined yet flexible strategy. He's not afraid to challenge the status quo or reinvent his methods as the world changes. That adaptability is a hallmark of all great traders and a key lesson for the follower. Dalio's openness is legendary. He shares his playbook with the world through books, interviews, and even animated YouTube videos. The follower takes full advantage, soaking up every insight and incorporating his principles into their own trading routine. By embracing Dalio's principles, the follower gains a powerful edge, one rooted in discipline, diversity, and a relentless drive to learn. That's a recipe for resilience in even the toughest markets. And now, we spotlight Stanley Druckenmiller, a name that may fly under the radar for many, but not for those in the know. Druckenmiller is the ultimate trader's trader, renowned for his long-term partnership with George Soros and his own extraordinary track record. Druckenmiller was Soros's right-hand man during the famous British pound trade, but his career is filled with stellar achievements all his own. Over 3 decades, he delivered consistent, market-beating returns without a single losing year, a feat that's almost unheard of in the hedge fund industry. What's Druckenmiller's secret? It's a blend of deep macro analysis, nimble trading, and an uncanny ability to size up opportunities. Like Soros and Jones, he understands the interplay of global forces, economies, politics, and psychology. But he brings his own twist. When he finds a high-conviction trade, he's not afraid to go all in. Druckenmiller is also a master of humility. He's the first to admit when he's wrong, and he's quick to change course if the facts change. That flexibility is a key part of his success, and it's something our clever follower tries to emulate every day. He's obsessed with liquidity, always making sure he can get in and out of trades quickly. That keeps him nimble and able to adapt to changing conditions. For the follower, this is a vital lesson. Never get trapped in a position you can't exit. Druckenmiller doesn't chase fads or follow the crowd. He's a contrarian at heart, often making his biggest moves when others are paralyzed by fear or greed. The follower watches this closely, learning to trust their own analysis and to act with conviction when the time is right. Education is a lifelong pursuit for Druckenmiller. He's always reading, always questioning, always looking for the next edge. It's this relentless curiosity that keeps him ahead of the curve and inspires the follower to keep learning, no matter how much they think they know. Druckenmiller's humility, flexibility, and conviction make him a role model for traders everywhere. The follower takes these lessons to heart, building a strategy that's both bold and adaptable. With Druckenmiller as a guide, the follower learns that true genius in trading isn't about flashy headlines. It's about consistent, disciplined execution, year after year. Now, let's bring it all together. Our clever follower, let's call them the shadow trader, isn't famous, isn't on the cover of Forbes, and doesn't have a billion-dollar fund. Yet, in their own way, they are quietly mastering the markets, one trade at a time. The shadow trader's secret weapon? Relentless curiosity and the discipline to learn from the best. They pore over Buffett's shareholder letters, dissect Soros's currency coups, absorb Jones's risk rules, internalize Dalio's principles, and emulate Druckenmiller's humility. Every strategy, every insight, every hard-won lesson, nothing escapes their attention. They build a toolkit that's uniquely theirs, blending value investing with macro analysis, risk management, and trend following. The shadow trader doesn't blindly copy. They adapt, refine, and scale down the strategies to fit their own portfolio. It's about finding what works for them, not chasing someone else's glory. Quiet consistency is their hallmark. They avoid the lure of get-rich-quick schemes and instead focus on steady, sustainable growth. While social media is filled with day traders bragging about overnight wins, the shadow trader is in it for the long haul. Just like the legends they admire. Mistakes. Oh, they make plenty. But here's the difference. They treat every loss as a tuition fee for the school of the market. They keep detailed journals, analyze what went wrong, and adjust their approach. This continuous feedback loop is what sets them apart from the average investor. Risk isn't something they fear, it's something they manage. Like Jones and Soros, the shadow trader knows that survival is the first rule. They never bet more than they can afford to lose, and they always have an exit plan. Opportunities are everywhere, but the shadow trader is patient. They wait for the right setup, the high conviction trade, the moment when everything aligns. When it does, they act decisively, channeling the courage of Druckenmiller and the conviction of Buffett.